Are investors still too cautious? Is it time to buy in May? Well, you might be very surprised to hear what Tom Milley just said. You might be throwing your hand up after the interview like he just did here. Why? Because he's basically saying that the sell in May and go away. Hey, this time it's different. Throw your hands up. Why? It's a bull party. It's time to buy. And at least for today, bulls are agreeing. What's worked so far this year is largely working, aside from Apple, which Warren Buffett did trim. So after we heard that we have a Goldilocks report that'll please the Fed and the market, man, the bulls are getting loud and they are getting proud. So now let's jump over to this interview and see exactly what Tom Lee had to say. Just bear with me for 1 second here. Here we go.
Yes, that feels investors are still too cautious. But he thinks that the fear of May or the sell in May and go away will turn into buy in May. Tom Lee is managing partner, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. We'll never forget the call that that you made, and it was one of many pretty good calls, but it was what the S&P was going to do near term based on inflation not being as bad as what was built into the market. And I think you're kind of returning to that theme, and I'd like to know why you think that. What do you know about inflation that the market doesn't seem to understand right now? You don't think we need to be as hawkish as we are?
Yes. A lot of it has to do with why CPI has remained stubbornly high. Powell talked about it, that there's this residual lag associated with housing. So even though home prices...
So there you go. He's talking about housing. Housing's the reason why. I'm not smart enough to understand housing, but I just care about what the bulls are saying. Let's listen to this next clip here.
It's back to 65 before you can blink.
That's right. I mean, Bitcoin still, we think, early in an upcycle. So the idea that it could get to like 150,000 this year is still, within our base case. And
150,000 in 2024 is your base case. Okay. All right.
I hope you heard that. His base case is that Bitcoin's going to go 100% higher between now and the end of the year. Man, this guy's bullish. If you didn't know, he's one of the biggest bulls. But here's what I find a little bit interesting is that we're seeing some conflicting data. And notably, if we look here too, the weekend we talked about how conflicting economic data spurs swings across asset classes. Well, that's basically what he's saying. He's saying fear in May, hey, screw that. It's going to become buy in May now. So here's what I'm noticing, which contradicts this a little bit. First of all, the S&P is up by it's over 1% today. The NASDAQ's up by 1.1% today. We left a gap on the weekly chart. You can see that right here. Okay. And now we're leaving a double gap on the daily chart. Oh, wow. Okay. So these bulls are getting loud. They're getting proud and we're pumping up. Yes. But here's the part that gets me a little bit uneasy. Just before Powell spoke, we were at 45. And here's where the S&P was. I remember this specifically because we went through it. So the S&P was right here. We were trading at roughly 5,000. Well, now we're trading at 5,200 and we're less bullish, meaning people are not getting greedy. They're actually getting scared. We're up by 1 point and we're lower than we were before Powell. So the market has gone higher, but the fear and greed is not catching up. Is this time different? Man, everyone seems to have an opinion. So, right, throw your hands up because, man, I just don't know. But I'll tell you what I'm noticing here. The Goldilocks scenario means that the Fed and markets should be happy. This fear and greed should be pumping up. You just heard the bull story. Doubling, right? Double Bitcoin, double everything. But we're also seeing that sell in May and go away is the normal thing we do every year. So what's going to make this time different? Well, until we see a pattern break or that monthly higher high like we talked about, I'm not so sure. I'm not as confident as Tom Lee. Why? Man, stocks can do a U-turn like that. Look at Palantir here, right? Up by 8% today or $1.88. Poof, it's gone. It's down by $2 in after hours here. Puked up all of the gains from today. Why? I don't know this company well enough. Maybe you can leave me a comment and tell me why. But here's what I do notice. It's a tale of two economies we have. And sorry, just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So this is why I'm confused. I'll tell you what I feel confident in and what I don't feel confident in. Some charts look great. The Dow, the New York Stock Exchange, RSPT or Equal Weight Technology, the DAX, and the S&P and the NASDAQ. But a lot of charts don't look good. They look weak. Here's Equal Weight S&P 500. Here's healthcare, double top. XLF, double top. CAF, double top. I don't like this. I do not see the breadth and depth that others do. Also, here's another thing that gets me a little bit uneasy where I'm not sure. S&P broke its 5-month win streak, and what normally happens after breaking a 5-month win streak is we go nowhere after a month. We're exactly 0.0 on an average, negative 0.1 on a median. The percent times we're higher, 42%, less than half. If we look out 3, 6, and 12 months, then it's 85% win, 85% win, and 100% win. So maybe that's what Tom's talking about. But he seems very bullish about like May. Well, I'm a lot less confident. Why? Man, I'm just looking at the data. And the data says, hey, sell in May and go away until they get proven wrong or form a higher high. I'm assuming this is correct. And I'm assuming this is correct. Why? Because that's what the charts tell me. And if you get very emotional on the way up, you're going to feel very low on the way down. You want to try to be like Bruce Lee and be like water, because some charts look great, some charts look terrible. And I don't know where we're going to go. He also talked about us going to 150,000 on Bitcoin. But here's the interesting part. Bitcoin has been a great leading indicator. Bounce off the 50, reject on the 50. But now look what's happened here. It did go to that lower low like I've been calling for, right? That would be a monthly breakdown. But the S&P is not doing that. We actually broke the downtrend and we're going higher. So is it that Bitcoin's strong and it's going to drag Bitcoin higher? Or is the S&P getting too ahead of itself with that daily and weekly gap now? I don't know. Here's what I'll tell you that I do know, though. We're going to hit one or two numbers. We're either going to hit these targets or we're going to hit these stops. And what this would basically mean is that the bulls can now hit these targets and they have room to backtest their moving average or the 50 MA. We've been talking about this for some time too. This is not quite good enough yet, though. Why? 519 is not going to be a monthly higher high. If we go here to the S&P, well, we need to break this spell where this pattern is above 525. We got to break that monthly higher high. Otherwise, like we talked about, look right here. There's our lower high. There's our lower low closing below the low. Why does that matter? Well, let's look here to our weekly charts. No coincidence that the same thing happened here. Lower high, lower low, closing below the low. Then we get a second lower high, a second lower low, closing below the low. And then a third one, right? There's your crash. There's your correction. And at one point here, it did look like we were fine. We were green on the week. We were going up. And boop, it fizzled, just like the Palantir gain. So is this what the S&P is going to do in the NASDAQ? Man, I don't know. I wish I did. I wish I was I wish I was as smart as all the other YouTubers who know exactly where we're going to go. All I'm looking at is probabilities. And right now, I don't know. Targets or stops, what it tells me is who wants it more. Because remember, I told you at the beginning, this is supposed to be a Goldilocks report for the Fed and the market. So why aren't people adding on risk? Why is Bitcoin not getting bid up? Why are we seeing stocks move in a way that is not predictable? That's the part I don't know. So lines are pointing up. Volume's not supporting it, though. And it's a very light data week, which means that we're likely going to move based on price action like we talked about on the weekend. There's going to be two auctions, a 30-year and a 10-year auction starting on Wednesday and Thursday at 1 p.m. It's going to be a big one, too. Treasury rally risks running into a $125 billion brick wall. Could that be the catalyst for this week? Hey, we're going to have to tune in and find out exactly what's going on. Finally, we also talked about this where if we're in a yellow light and fall to a red light, we're breaking further, 2 lower highs, 2 lower lows. If we reclaim a green light, then we're back up into all-time highs, and that was likely a bear trap. So that basically means that we're green on the annual, yellow on the monthly. Until then, exercise caution. Why? Because that's what you do at a yellow light. You don't slam the gas and hope you make it through the intersection. Might get into an accident. All right, watch the video on the left or subscribe on the right, and I'll see you at 9:15 and 9:30 tomorrow. Thank you very much.